Is an epic gold bull market on the horizon for 2019? I'm not talking about a garden variety cyclical gold bull market. I'm talking about a bona fide gold bull market, maybe even a mania. Let's take a look. The gold bull could be riding a powerful wave based on the confluence of several catalysts. First up is the Bank for International Settlements located in Basel, Switzerland, or the BIS. Its members consist of 60 central banks from the world's largest economies. It is the central bank for the central banks, and its job is to facilitate transactions, notably gold transactions. The BIS also issues Basel Accords, or recommendations for regulations. Earlier this year, Basel III went into effect around the world. Buried among the typical banker's jargon was something huge. A 0% risk weighting can apply to gold bullion held at banks or held in another bank. In other words, gold's official role in the international monetary system has been upgraded for the first time in decades. Think back to the early 1970s when we were on a gold standard. In some circumstances, banks can now consider physical gold they hold as a 0% risk asset. Previously, gold was considered riskier, and most of the time could not be classified in this way. This new rule makes gold much more attractive and gives gold more official recognition in the international financial system. Second, gold is being treated as money for the first time in decades. Looking at this chart here, you can see that in 2010, central banks changed from being net sellers of gold to net buyers of gold. And remember, central banks are the biggest participants in the global gold market, and the trend has accelerated. According to the World Gold Council, central banks bought a record 651 tons of gold in 2018, the highest level of net purchases since 1971, and also a 75% increase from 2017. Also, as you should know, Russia continues to dump U.S. treasuries and use the money to buy gold. Third is China's golden alternative. Last year, the Shanghai International Energy Exchange launched a crude oil futures contract, so China will allow for large oil transactions outside of the US dollar. China has linked the crude oil futures contracts with the ability to convert yuan into physical gold. In other words, China's golden alternative will allow oil producers to sell oil for gold and completely bypass any restrictions, regulations, or sanctions of the U.S. financial system. CNBC estimates that the golden alternative will eventually hit $600 to $800 billion a year. Much of this will flow into the gold market. Since China is the world's largest importer of oil, China's golden alternative is a big move toward gold's remonetization. Other gold catalysts include that now we know from this week that the Fed has capitulated and is back on the easy money charade. Next is the record breaking year for gold mining mergers and acquisitions. And then the fact that socialism is on the rise in the U.S. and is becoming entrenched in U.S. politics. Modern monetary theory, or MMT, which isn't all that modern or even new. And lastly, gold-backed cryptos. And so now let's look at our long-term chart on gold. So now we're looking at the monthly chart on the Spider Gold Trust. The symbol is GLD. And for disclosure purposes, I do not hold any shares of GLD at this time, and I don't have any positions in gold mining companies either. And this chart goes back to late 2004. It's a monthly chart. It doesn't go back as far as I'd like to see, but it's good enough for our purposes today. So just looking here at the price chart, a couple, three things pop out that we need to mention. Looking right here, and my line's not going to be the best in the world, but you kind of see that today, Thursday midday trading, we just popped above that line there. So it looks like we have a minor breakout at this point in time. So that resistance level has been there since maybe back to 2014. So that's a number of years that this gold trust has been basing. The other thing to take a look at is this upward trend line here. Not real good, but you get the idea. And as we've talked before, and we've seen this formation many times before, that as you move down toward the pinch point, stocks have the tendency to pop either up or down, and they pop pretty hard. And right now it looks like it's popping pretty hard on the way up. And it is an upward bias in this bottom trend line. And that's generally what happens is you have that trend line moving up, and that kind of forces the move upward above that resistance line. The other important thing to take a look at too is what I really love is this very long-term basing pattern. This nice dish all the way through here and up to this point there. So we started this trend line back in 2012, maybe even 2011, depending upon how you want to draw it. But it doesn't really matter. That's a multi-year basing on gold. I love that. Those tend to move in long terms on the upside. Now, the move's not going to be necessarily fast. Today, this last week or so, things have moved pretty quickly with regard to the dovish Fed, but that doesn't mean that from here on it's going to continue to move up rapidly. I'm not saying that, but I do think that we are moving out of this trend that we've been in for the last several years through here, and I think we're breaking above that, so I think we have positive territory to look at here in the future. Maybe it's going to move slowly, but still it's going to be positive. Looking here at the MACD, you can see the same sort of basing pattern all the way down here and through here. It's been in this zero line, midline here for a couple of years, 3 years now, and it looks like it's popping up. Now, it did that pop up here and then also in this time frame here. So I think that this time may be a little bit different because it is coming off of a relatively good basing here, whereas this move actually started down there, and then we meandered here for a couple of years. But I do think that things are looking good. And you can look at this MAC and even see perhaps a cup and handle. Again, the cup and then the handle. That's another formation that I love to see. The histogram shows things are good on the way up as well. Price rate of change, probably pretty similar to the MAC. The relative strength, again, we had that bottom here. We moved on up and we're heading up, and we'll probably get into this overbought territory in not too long here. So you probably had, even from late 2018 to this time frame now, to have an idea that we were going to be moving up. And we've had a couple of videos on gold before where I was telling you that things were improving. So moving on down here, you can see the stochastics. That looks good as well. Volume looks fine. And then lastly, the Williams looks good. We're in overbought territory, but it can remain in that overbought territory for quite some time. So I wouldn't worry about that. But I think the two things really to look at are first the price chart and then the MAC. And both of those really look good. So in my opinion, gold is something to take a close look at. Now, I would imagine that silver probably looks pretty similar. Let's just go down real quickly and look at the silver trust, the SLV, and it's pretty much the same thing. It's the iShares Silver Trust. Again, the symbol is SLV. For disclosure purposes, I don't hold any shares of silver either. And pretty much the same thing. Going back to 2011, we have this nice basing all the way through here into there. Now, silver probably has a resistance line somewhere around there, and it's not near that. So it doesn't look as good as gold, but still it looks favorable, and I would imagine that it's going to be heading for a breakout at some point in the near future as well. The MAC on silver looks very similar to gold, so I would imagine all the other oscillators do too, and a quick look indicates that yes, that is true. So moving back up here to the price chart, take a look at gold and take a look at silver if you're looking for some alternative investments. But as usual, conduct your fundamental analysis. So for today, that's Two Dog Charts. Thank you.